That's really important. Which really brings us on to the investment opportunity. And Scott, I'm going to ask you to sort of take us through the second slide, but I'll talk a little bit about this property. It's a property that we've owned, well, one of our clients has owned for a couple of years. It's very interesting in the fact that if you look at the picture, it's basically this half of the building. So it is a detached building, but this half is the set of flats, and there are 3 flats. There's a ground floor flat, which is a 1-bedroom flat. There's a flat in the middle, which is a studio flat, and then another 1-bedroom flat at the top. They're all lovely, bright, light flats. You can see the size of the windows, which means there's lots of light streaming in. And they have performed very well for our client. What is important about this particular investment is it is a freehold. So basically it's got 3 flats which have a leasehold attached to them, but this particular opportunity is to purchase the freehold with all 3 flats, which is also quite interesting because it provides 3 separate income streams. We have complete autonomy over the management and the maintenance of the block, so we don't need to speak to any freeholder. We don't need to ask anybody if we need to paint or if we need to refurbish. It's something that we can do. There is immediate income associated with this property because it is rented. At the moment, there's a tenant in the top floor. We've actually just, the tenant in the bottom flat floor has actually just moved out, but we are marketing as we speak, and we have a tentative offer for this flat on the table at the moment, and there is a tenant in the middle flat as well. So there is a ready income stream when buying this particular opportunity. There's also an opportunity to increase the gross yield, so the rent is going up on the bottom flat, so you know, we will see a slight improvement in the yields. It's located within 200 metres of the mainline station. This is the station of Highbrooms in Tunbridge Wells, and that's a direct line into central London. So very, very good location. It's also within easy distance of the centre of Tunbridge Wells, which is a beautiful historic Victorian town, very high demand, very affluent area, very good schools in Tunbridge Wells, very good schools in the area of Highbrooms as well. And Highbrooms is actually in the catchment area for a lot of the grammar schools. So in terms of demand, there's always a lot of demand for properties in Tunbridge Wells and in this area. And the benefit of this particular property is it's so close to the station. So it's literally, you know, a hop, skip and a jump, and you're on the train to London. Also, in terms of proximity, very good access to Europe. So the Eurotunnel is literally a 35-minute drive from Tunbridge Wells, and you're across into France. We take quite a few trips to France. We're located quite near to this particular block, and it's a 3-hour commute, basically door to door to Le Touquet in France. So it's really, really easy to get across. Gatwick and Heathrow are very close by, so you've got good access to the airports, and the proximity to London is excellent. So in terms of location, it's a very good location. I'll ask Scott just to take you through some of these numbers, but in terms of this property was purchased, it was a very good deal at the time. It was purchased for $425,000. It was purchased as a whole. The whole freehold was bought with the 3 flats, and the deal value in 2019 is $482,500, which is a very fair price for this property, and I think there is still that's still being bought at a significant discount as to possibly what you could get on the open market. So this particular investor has had a value uplift of about £57,000, which is pretty good, I think, over 2 years. So Scott, maybe you could talk about the rest of the deal and how it's structured.
No, perfect. Thanks very much, Lauren. Just before we go into that deal, and I need to check if there's any other questions per se around Crestwood. But just two questions that I would like to go into before we touch on that deal is, what is the average loan to value for a non-resident turning up in England at the moment and getting a mortgage?
So to be honest, Scott, you could probably get up to 60%. I'm advising our clients to look around, to try and secure around about 50% loan to value, and it very much depends on, you know, the number of investments that the client has in the UK as well, because mortgage interest relief is being tapered off over the next couple of years, and by 2020 you will not be able to deduct mortgage interest from your income. So it's important that you don't gear too highly, otherwise, you know, you could be in a sort of negative cash flow position, which is something that we certainly wouldn't want. And that very much depends on your earnings level as evaluated from a UK tax perspective. So if you have lots of other investments in the UK and you're a high rate taxpayer, then you know you should be a bit careful about how high you gear your property purchases. But 50 to 60% is, you're still fairly safe, I would say.
Okay, great. And then what is the cheapest properties that Crestwood would be offering at the moment? So not specifically this deal, but if I come along, what's the sort of the bottom entry?
Yeah, so it's around about £130,000, Scott. Sometimes we look at a property for a client at the moment. We've just secured a deal at around about 120. That's for a one-bed flat in the sort of Maidstone area. A studio flat is slightly less, so you can get a studio flat probably between 100 and 120,000. So you're looking at about sort of £50,000, yeah, if it's geared.
Yeah, so again, if it's geared, you know, you're looking at £50,000 minimum plus costs in terms of you know where you're at, and so, you know, for me, the reason I was just asking a couple of questions was that one of the things that's been amazing to me is that, and I want to, if you don't mind, I'm going to share my screen. I'm going to go and take back control of my screen. So one of the things that's been amazing to me, and most of you that are on this call know my history in terms of IPS and helping people invest in England, Australia, America, and South Africa since 2004, actually. And like I said, I invested in London first in 2002. And I was actually with Lauren, I don't know, probably 2 years ago. I need to find the video when you were actually buying this property. And I remember saying, well, this is the exact type of property that I like to invest in, basically. And then subsequently, Lauren got hold of us and said, well, look, the seller actually is immigrating and needs to exit the opportunity. And so I got really excited, and I said, well, look, why don't we actually do this opportunity through IPS and allow people to participate on the Wealth Migrate platform effectively through IPS. And so what we've got is, if you go on the Wealth Migrate platform right now, you can actually get all the details. You can download this brochure, which explains what the property is, where it is, everything that Lauren's just been showing you. You can also see the breakdown of the cash on cash and the IRR and what is expected, and you know, ultimately the numbers and what's important in terms of the numbers, the purchase price. You can see the total equity required. So we are going to finance this. We have worked on a 50% loan to value, and again, based on what Lauren said, you know, if we can get it higher, we possibly will go higher, but all the numbers are done on a 50% loan to value. There's a whole little bit here on why the UK and even why this property, and then just in terms of IPS and what IPS is about, and more importantly, what Crestwood is about. Because at the end of the day, I always say to people, you invest in, most people think they invest in property, they don't, they invest in partners. And for me, that's where Crestwood comes in, because they're on the ground and they're managing the property. So for me, I wanted to just come back to it. This brochure is on the platform, so you just can go to wealthmigrate.com and you can download the brochure. If for some reason you can't figure that out, you can type in brochure, and we can send you the brochure. And or you can speak to anyone in our team. I wanted to reiterate to you some of the things that I take away as sort of highlights from what Lauren's talking about. The first one is that this property is freehold. So if you go back to what she was talking about in the presentation, freehold is that much better than leasehold. Now, I own a number of properties, and all of my properties to date have been leasehold, actually. So this would be the first opportunity for me to actually get involved in freehold, and it's harder to come by than you think when you're buying terraced, semi-detached, and/or apartments. It's very unusual, actually. And am I wrong, Lauren, in saying that? I mean, again, if you're buying houses, freehold often is fairly common, but when you're buying sort of detached, semi-detached, or apartments, it's very uncommon. And yet here you're buying the freehold. In fact, you own the land and the building.
Yes, the way this deal is structured is actually quite interesting, Scott, because yes, so you're buying the freehold, and each flat is legally structured as a share of freehold. So if you wanted to, at some stage, you could sell each flat individually. It's already set up, the legal structure is there. So they would then be sold with a third share of the freehold with a lease attached to that. So, essentially you've kind of got the best of both worlds, I guess, in this, in that, you are right in terms of saying that, leasehold properties, most flats bought or sold in the UK are actually leasehold. What's interesting, though, is that a very, very strong trend now is that developers are actually structuring a lot of the new developments as share of freeholds. And that's simply because, freeholders in the past have been able to increase service charges almost willy-nilly, which makes the value of your investment decline as well. So what's great about this particular investment, you have 3 income streams, 3 flats, but you don't have the costs associated with the leasehold property, which is what normally flats are. So you don't have to pay ground rent, and you don't have to pay service charges. Obviously, you have to maintain the building, which is fair enough. I mean, you would have to do that with any other investment as well, but you have complete control over the cost of renovating, of maintaining that particular building. So you're not paying for management fees on top of management fees. You're not paying for a company to manage the property and refurbish it, etc. That you're obviously going to pay Crestwood to do that, but you're not paying fees on top of other fees if there's another party involved, which is the freeholder. So it's a definitely, in terms of generating income, it's a much more efficient way of doing it.
Yeah, completely. And to echo what you're saying, whenever I look at a property, and quite frankly any investment people look at, they should look at what the exit strategy is. So the exit strategy in 5 years, is you could sell it off as a whole building, but actually the real opportunity is that you sell it off as 3 individual flats, like you've already mentioned, because you're going to get more of a commensurate price selling it to an end user than you will to another investor. And that's what really attracted me. Now, on top of that, from a risk perspective, as you said, the bottom tenant is, or one of the tenants is changing. It's not there's 3 separate rents that are not tied in any way. So from a risk perspective, you've got 3 separate rental income streams, which again, for me, is something that is significantly important. My properties back in the day, when we were renting it out by the bedroom, it was the same thing, and if one person leaves, it doesn't, you don't have a massive hole in terms of trying to pay the mortgage. The third thing that I think is really important is that there's tenants in the property. So you mentioned if you normally go and buy a property, if you buy it, you could wait a month or 2, whereas now there's actual tenants in it. So there's income streams. And even though you're leasing, you're marketing for that third unit, because you're in control of the management, you already are the management agent, you can do that straight away. Like, we're not waiting for transfer or, in terms of that property, which I think, again, is very important. Exactly. The fourth one that's critically important for me is that in this case, the property inside out, all the warts and all. If the roof had been leaking, for the last year, and the RICS valuer managed to miss that, that's the risk that we have in any new property that we buy, new or existing is what I'm talking about. Whereas in this case, Crestwood has been the management agent on this property for basically 2 years already. Now, I particularly like that because I know the property, I know the numbers, and I also know the seller, and I know why the seller is selling. Like they haven't suddenly found out that the building's about to fall down and they're just trying to get out of it. You know, in terms of that process. You've already mentioned the fact that the gross yield can be improved, which I like. As you said, it's time for a rental increase, which will obviously take some time, but you're already doing it in the one property. And then the last one that I really just wanted to mention was that I've always been a Southwest fan. I've lived in Wimbledon and bought a number of properties in that area. And it was actually you and Ken that introduced me, although I played a lot of rugby in Sevenoaks and Tunbridge Wells, but introduced me to the property side of it. And it really is a very beautiful part of the world, but equally very convenient to get in and out of London Bridge. And the fact that it's within 200 meters of the train station, I always taught people when they're investing in London to live by the rule of 10 minutes. If the walk was more than 10 minutes from a train station or a tube station, you were going to have quite serious problems. A 200-meter walk is like a hop, skip, and a jump by London standards. And so for me, it's those are the reasons that I got excited. And when I say Lauren let me know about it, and I said we have to do this deal to allow people to participate. The good news is because we're doing it on our platform, we are organizing the mortgage already, so people don't need to organize the mortgage themselves, and they will also be able to invest. I mean, we only need to raise. Hang on, let me get the numbers right. We only need to raise £240,000, and I know on our platform our minimum investment is £1,000, but on this one, because it's quite a small deal and everything, I think the minimum, and it hasn't launched yet. We're just trying to finalize the mortgage details, but it's literally very it's going to launch very, very soon. So if you are interested, I'd suggest going on the platform and reserving your spot. But I think the minimum is going to be probably £10,000. The reason I get excited about this is with £10,000 right now in England, you can buy nothing. I'm not going to talk about the bits of land that you can supposedly buy, but anyway, that's a separate conversation. But you can now participate in the UK, in the London property market, in an existing freehold property with 3 different income streams. And so yeah, I'm really, really excited about it, Lauren. And I've always been a big proponent of UK property, specifically London property, and actually of Crestwood as well. I've spoken very highly of Crestwood. And what I'm super excited about now is that if there's people on this call that want to go directly to Crestwood, they're not interested in investing with other people, that's fine. Crestwood can help you one-to-one. They can help you go and buy a property that suits your requirements, or you can partner with myself and others and Lauren in actually buying into this deal, which is where effectively you can spread your risk across across different jurisdictions and do it on the platform. So I'm not sure, Lauren, just quickly, if someone was interested in going direct to Crestwood, whatever, they just want to buy their own property in London, how would they do that?
Well, they can just drop me a text or a WhatsApp. We have a website, which is www.crestwoodproperty.co.uk. Or you can drop me an email at laurenwilliams@crestwoodproperty.co.uk. And yeah, or go through yourself, Scott, whatever works for the individual. And we will generally aim to get back to you within sort of 24 hours and give you an overview of the fees, etc. There is a partnership fee with Wealth Migrate if you've come through the Wealth Migrate platform. So we would send you the details of that. But basically, But
it's no more expensive than if someone comes directly to you, which I think is quite important. And on top of that, it's actually functionality we're building into the platform where people can actually go on Wild Migrate. They can go straight to Crestwood, and it'll send a direct lead or contact to you, so people can deal with you directly. And again, I've got no problem people going directly to you. I just would appreciate if people actually mention that they come from Wild Migrate, so that Lauren gives you extra special service.
Yeah, and certainly, we have had various people contact us, and Scott has sent through quite a few referrals to Crestwood, which is fantastic, and we're very grateful for that. And but just really, because I'm so passionate personally about property, we're just really keen to help. It's been an asset class that's done very well for me personally, for my family, and So it's something I'm very excited about. So, you know, I can talk endlessly about property and property in the UK. So I'm very happy to chat to anybody who, you know, even just wants some advice. More than happy to spend a few minutes talking, or an hour, or, you know, however long it takes to talk about UK property and the potential that it offers. And I think, you know, what's very, very exciting for me is just seeing how the properties are working for our clients now. Having been in business for quite a while, 7 years, we're starting to see some really good results with some of the properties that my clients bought right in the early beginnings. We've obviously taken rental increases, so the gross yields that they're achieving now and the net yields are far higher than when they first invested. And that's a good key point as well. I often say to investors, you know, the very worst time to invest is the day that you invest, because your returns will improve thereafter, because we always, you know, there is going to be some capital appreciation, as you can see from the long-term trend, and your rents are going to increase as well. So your very worst position, unless, you know, a nuclear bomb is dropped on the UK or something, which nobody could help. But generally, because of the positive trends in capital growth and in rental increases, you generally will make more money year on year. And I think that's certainly the case in terms of our investments and the portfolio that our clients hold.
Yeah, and I mean, there's a couple of questions here, Lauren, if you don't mind, that I'd just like to ask.
Yeah.
Just a comment before I ask the questions is that, from my experience, and without being arrogant, but we've been pretty good at picking markets when the timing is right to be in those markets, if that makes sense. And, you know, I don't see Brexit as a negative. In fact, I see it as an opportunity. So if you take Brexit and the tax thing, the average, you know, English investors sort of running with their tail between their legs, and they think that it's a bit like Chicken Little thinks the sky's going to fall out, which actually provides a perfect opportunity to invest. And that's, you know, whether it was America in 2012, 2013, you know, it was London in 2009. It was, you know, anyway, I could go on and on and on.
Yeah.
It's, you don't buy when it looks hell of a good, because that's when everyone else wants to buy. You actually buy when everyone else is running short.
100%. And I mean, I think, you know, if we go back to that slide that I showed, the comment about Savills, you know, is the investors who bought in 2009, which was when there was a huge financial crash, and, you know, everybody was reeling from the shocks and the aftermath of the collapse of the financial markets, you know, have done far, far better than investment over any other period of time during that sort of 14-year period. So, you know, those who are brave enough or clever enough to know that the uncertainty around Brexit is probably fairly short-lived, and that the asset class as a whole is a solid investment class, are probably going to make a lot of money investing right now.
Yeah, perfect. What is Denise is asking, what is the CGT in the UK? Capital gains tax.
28%.
Okay. Lauren is asking, not you, a different Lauren, is asking, what about student accommodation available near to universities? Also upmarket retirement homes being refurbished from old hotels. I see a lot of this coming through. Manchester, Liverpool are a few.
Yeah. I think Manchester and Liverpool have been, there's a huge sort of push on student accommodation. Yes, it's very popular. And there is definitely a trend at the moment. It's not so much student accommodation, but in terms of multi-letting properties. So, in fact, in a couple of the properties that our clients own, 3-bed properties, we've actually not converted them, but we've just utilizing the lounge area as an extra bedroom, and each room is being sublet through a company to increase the yield. So there's opportunities to do that. In terms of student accommodation, yes, there are some significant yields being shown in terms of student accommodation. I suppose where I worry about student accommodation is the capital growth and the ability to sell that at the end of the investment, because there's only a certain amount of people who want to invest in student accommodation. It's not, if you think of the market, if you're selling a property and that property can be sold to someone who wants to live there, someone who wants to invest, someone who wants to cohabit or share. Your actual target market is so much bigger. With student accommodation, there obviously are investors who are interested in buying student accommodation, but that's pretty much all that you can sell it for. So
and
there
on top
are,
to back you up, you know, an emotional buyer is always going to pay more than a hardened investor that's all about the numbers.
yeah. So I think the yields are good and the yields are high in terms of student accommodation. There are sort of periods of void as well, because obviously, you know, universities are closed for a certain amount of the year. That is averaged across the entire year in terms of the rental income. But I think you also, you know, you do take a slight risk with, you know, I've got teenage kids and I know how they live, and they're not always the tidiest, the neatest, the cleanest. So sometimes, you know, you can have pretty messy tenants.
Your two daughters are angels. You should have seen me at university. Anyway.
Sorry, what was the other point? So it was student accommodation and
upmarket retirement homes being refurbished from hotels.
So retirement homes is a very interesting sector of the market. There is a large aging population in the UK, and that is growing as a percentage of the total population. So retirement homes are in great demand. Again, I worry a little bit about the capital appreciation on those homes. If you have a look at, you know, like-for-like size flat, like-for-like property, if it is classed as a retirement home, it's going to sell for less. It's just the way the market is. And you are obviously, again, there's a limited amount of people who are going to want to buy a retirement property.
Yeah, just two comments from my side. You know, having watched this over many, many years, I've watched more people lose money in student accommodation than I've seen make it in England. And again, it's all this. It's always sexy and hell of a nice, but you know, I've only ever heard generally, you know, horror stories in terms of people not actually getting what they want, and that's just my own personal experience. And the other thing with retirement, you need to be very careful. In the early 2000s, people were making a tremendous amount of money out of retirement homes, and the legislation changed overnight, and those investments went from highly profitable cash cows to, quite frankly, people you couldn't give them away. And I know personally a bunch of people that were involved. So again, be very careful of a space where regulation can have a big impact on return as well. You know, again, not saying it's bad, just saying, you know, I'm echoing Lauren's red flag in terms of where we're at. Denise has asked also, what is the average investment in the UK to get something decent in a good area close to London? I mean, I think you've answered that already, Lauren. You know, you're looking at, to get out of bed anywhere close to London, you need £50,000 plus, pretty much, cash.
Yeah, and that's for, you know, a small studio flat. You know, if you're looking at a sort of one bed to a one bed flat's going to cost you anywhere between 165,000 and 195,000. A two bed property is going to cost anywhere between 220 and 270,000. So yeah, your entry level is around about 120,000, or at the very, very bottom end, 100,000.
Sandra's asking, have you seen price decreases in the commuter belt just outside London?
Yeah, so I think I sort of touched on this earlier, but what we've seen in the area of sort of Tunbridge Wells, Tunbridge, Sevenoaks, this Kent, the area of Kent, is that good properties in excellent areas are selling at asking price. Other properties are being reduced. So I would say we haven't seen significant price reductions, but what we are seeing is reductions in asking price over, you know, the last sort of 6 months. So the actual overall, if we look at the statistics when they come out in terms of the land registry data and what properties have actually sold for, it will be interesting to see. At the moment, we're not seeing declines. In fact, Maidstone over the last year, I think did around about 4.5%. I think we're sitting at about 2.5% in Tunbridge Wells. So we have seen, based on land registry data, that property prices are still rising, but they are not rising at as fast as they used to. So certainly the price increases are more subdued, but we're not seeing significant price reductions at all.
Yeah, and I wanted to share, I'm just trying to get to my screen here. I wanted to share with you, because I actually opened it. You were just talking about the house price registry, etc. If people want to go, they can go to acadata.co.uk. And I've tended to always, like this. It's got reports. It's got the house price index of what's been happening, and then it's also got a monthly report that comes out that you can literally go into all the details. Reading this report, it actually talked about how the really prime properties in London, the sort of £10 million plus, were the ones that had taken a bit of a hit recently. But again, we've never focused on what I would call centre of London, top end properties. We've always liked to go after the commuter belt, properties because they're a lot more sustainable.
There's also an important point with those, Scott, is that prime property in London became a bit of a trophy asset for investors around the world who were almost willing to pay whatever it took to get a property in Chelsea or in Mayfair or whatever it might have been. So property prices actually escalated, out of control, really, I suppose, for a while in London, where it was more about, wanting to be in the right place, and it almost seemed to be a popular trend to have a property in certain parts of London, and that's really pushed the prices up dramatically, and that's really what the government has tried to stop with the stamp duty rates, etc. And if you have a look at the increases that they proposed, where the stamp duty has hit most is million plus homes, where it actually becomes quite a liability. So anything under that radar, the actual increases in stamp duty are relatively less painful. So we're looking at 3% in sort of the bracket that we operate in.
Perfect. Francis has asked, what's the minimum investment amount? So again, to the deal that we've got on the screen here, we're going to start at £10,000. And the reason being is that, just for a whole bunch of reasons, it's probably not going to get to £1,000, because the idea is there's not going to be too many investors involved. So yeah, I would work on £10,000 in terms of that. Bruce has asked, do you get returns on a 3-monthly basis or other period? My understanding, Lauren, is that you collect the rent on a monthly basis.
So the way we work with all our clients at the moment is that they get they're paid monthly in terms of their rental income. How exactly we structure that through the Wealth Migrate platform, I'm not entirely sure. Scott and I need to have that discussion, but certainly we can accommodate monthly very, very easily.
Yep. So basically, I just was double checking on the monthly. So obviously for us, Lauren, in a commercial deal, if you're collecting it quarterly, it's impossible to make it monthly. You are collecting it monthly, and maybe
exactly.
Worst case, it might be a month later, whatever. But to answer your question, Bruce, it will certainly at worst be quarterly, but hopefully our intention will be to actually get that to monthly, in terms of the systems that we want to build with Crestwood. Bruce also asked, where is the holding entity registered? So it's a UK-based SPV, special purpose vehicle. And we're actually just working with our accountant, our lawyer, and the mortgage broker in terms of just the most efficient structure for that. But quite frankly, we just want to keep it simple. And for a whole bunch of reasons, it's best just to have a local SPV that'll own the property outright. And another question here, and I don't know how you want to answer this, Lauren, but is Crestwood investing as well? And certainly you've been a massive partner in the deal for the last 2 years in terms of this particular property, and obviously going forward. But yeah, that's a question. I'll just don't shoot the messenger.
So I'm not personally investing in this deal in terms from a monetary perspective. I have invested many hours in the property and managing it and looking after it, and that's purely because we are I personally, at this stage, have other commitments. So we are heavily invested in property already as a family, and yeah, in terms of Crestwood business itself, that is not something we do at the moment. But yeah, so I'm not personally invested in cash in this property now.
And yeah, from my perspective, I will be, and also probably signing the surety on the mortgage. So I'm putting my money where my mouth is. And but yeah, Lorraine just said, I'm very interested in the investment, Scott. What is the time frame and the exact strategy for this property? The exact strategy is we've already effectively got it under contract with the seller. We're just finalizing the structure and the mortgage details, like we said, in terms of that process. So it's if you are interested, I'd suggest you just go on the Wealth Migrate platform and register your interest. I'll be quite frank with you. As I've said to Lauren, I've been helping people invest in London since 2004, and probably between me and Lauren, it could take a couple of telephone calls. Forget about digital marketing or platforms or any of the above. So we're just literally trying to just finalize as you can imagine, whether the loan to value is 50% or 60% will make a small difference. And obviously it'll just be on a first come, first serve. But, quite frankly, I don't, as soon as we get that done, we'll go to market, we'll raise the money, and we'll buy the property. And I see it happening in the next couple of weeks. I know in terms of actually, whatever language you understand it, settlement, transfer, whatever, it does actually take about 3 months for the UK lawyers to put it through. The process has already started, so we're already going through the process. So realistically, it would probably only, transfer probably realistically, Lauren, best case at the end of April, I would say.
Yeah, I'd probably say May, Scott, but end of April, May, yeah.
Yeah, but I mean, that's out of our control. The people that want to participate in it, need to be in it long before then, because we're going to finalize who's in, get involved, finalize it, and close out, basically. So, yeah. Are there any renovation planned or likely to be needed in the near future? I'll let you answer that, Lauren, but yeah.
So if you have a look, or if you remember the picture of the property that I put up, it is a relatively old building. It's a very beautiful building, but yes, so there's no renovations required as such because the flats are in good condition as they are. However, it is an old building, so there will be ongoing maintenance. We did have in this particular property a water tank that burst over the last couple of months. Obviously, that is something that comes with property investing. It's not something that we necessarily, can tell that's going to happen. So that has just been replaced. So there's a brand new sort of water tank in the middle flat. But other than that, I would say it's ongoing maintenance. The flats are in good condition. There's no reason to need to recarpet or repaint at this stage. So yeah, however, they will, over the period of the 5 years, will need some touching up and some renovating at some stage. But it's not something that is required right now. They are all in good nick. They are all tenanted, as I said, other than the bottom floor flat, which has had some work done to it. It has had some touch-ups. It has had a little bit of sort of smartening up done to it already. So it will be bought, in better condition than it was perhaps a month ago.
And on top of that, just, Lauren, myself, and our partners have all been in this game a long time. There is actually an allowance for maintenance on a monthly basis in the numbers. Now, that doesn't mean we're going to spend the money every month. But, having owned property for a long time in England, you need to have that. So I just wanted to point out on the cash flows, basically, that they have actually been taken into account. Let's just see here. Sorry, Lauren, I'm very conscious of your time. Getting lots of good questions here. So look, I think that's pretty much all the questions. If you are interested, like I said, go on the platform, register your interest. As soon as it's available, we'll let all the people that have registered their interest, know about it. In terms of opportunity, I'm particularly excited. It's been a while since I got into the UK market. I personally have thought that the market's been a bit, to use Ken's language, a bit toppy for a little while. But actually, the whole Brexit thing has provided a good opportunity, You know, they always say when trying to make money in property, buy from a motivated seller. And, you know, for me, this is a classic example of that. And I just want to reiterate to everyone, you know, it's 3 separate properties on a freehold, you know, 3 separate tenants, 3 separate income streams. We know the property well, or certainly Crestwood knows the property well. I've personally stood outside it. In fact, if you go to YouTube, you can see the video 2 years ago. And again, the location for me is really particularly what is of interest to me. You know, 200 meters from the train station with a fast train into the city. And so, you know, really on that basis,
Hi, Scott. Sorry, I seem to have lost you.
I was talking away there. Where did you last hear me to?
In terms of just exciting opportunity, in terms of, you know, different income streams, etc. So yeah, it was round about there. I'm not sure if everybody else lost you.
Yeah, so just to repeat in case you didn't, you know, we've got the 3 separate income streams. We know the property, we know the seller, we know why they're selling, motivated seller. And then probably for me, the one that I like most, the 2 things I like most is that Crestwood already knows. Hello?
I can still hear you, Scott. Yeah.
Crestwood knows the property, and you know, you're dealing with a partner. So when we're looking at these returns, whether it was student accommodation or whether it was, you know, what's the word called, retired living or anything like that, there's returns that might or might not happen. Whereas in this case, you know, the numbers are fairly bulletproof because you know, Crestwood's already been managing the property, and that's what got me excited, and that's why, you know, I wanted to get involved in this deal.